In this explainer, we're going to document a proprietary geometric system known as market DNA. Specifically, we'll be watching how it's being applied to a particular cycle in the S&P 500 index.
So here's our game plan. We'll start with a quick introduction to what market DNA is all about. Then we'll jump right into the specific S&P 500 cycle that we're documenting. From there, we'll break down phase 1, taking a close look at the entry levels, the risk parameters, and the potential projections. And to wrap things up, we'll see what we're watching for in the next potential phase.
All right, let's get into it. So what is market DNA? Well, it's described as a proprietary geometric system. The whole idea is to map out market cycles, but it does so using its own set of predefined geometric shapes. Now, here's what really sets this system apart. The market DNA model is designed to operate on its own logic, completely independent from other methods. That means it doesn't use standard technical analysis, fundamental analysis, or any of the usual quantitative indicators you might be familiar with.
And just to be crystal clear on that point, this system is not based on any of the standard tools of the trade. So you won't find any Fibonacci ratios here, no Elliott waves. It also doesn't rely on common chart patterns, support and resistance levels, trend lines, or breakout strategies. Its logic is, well, entirely its own. Okay, so let's turn our attention to the main subject of today's documentation. We're observing a very specific, designated cycle in the S&P 500 index. The official ID for this one is SP500_4_1. So let's take a look at the actual structure we're talking about. This is the S&P 500 chart from February 17th, 2026, and you can see the market DNA geometry laid right over it. There are several shapes you can see right away. There's Triangle 1, Triangle 2, and Triangle 3. That bigger shape is the trapezoid, which points to a future time and price interval for this cycle. Oh, and that diagonal line? That's the mirror delay line, which is a key level we'll be keeping an eye on. Right now, the documented status of this cycle puts us squarely in phase 1, and that, in this system, is the entry phase. So how exactly does phase 1 work? Well, it all kicks off by identifying two very specific designated entry price levels. And here they are, the two distinct entry points for this phase. The primary entry, which is labeled M, is set at 6,778.29. Then you have the secondary entry, labeled P of C, at 6,672.77. Now, it's really important to know that P of C is an optional secondary level. It's considered part of phase 1, not a whole new phase. Okay, so with those entry levels defined, we can now dig into the risk management side of things. We're also going to look at the profit projections that are outlined in the plan for phase 1. These are the key ingredients for the risk calculation. The model uses a hypothetical starting capital of $100,000 with a max allowed drawdown of 5%, or $5,000. The mean entry price between the 2 points is calculated at $6,725.53. We also see that this cycle's trapezoid has a time duration of 30 days. And then there are a few other parameters that get factored in, like the third triangle domain, a risk coefficient of 2, and a contract size of 10 units. So what happens with all these numbers? Well, according to the source documentation, there's a very specific formula for figuring out the position size. It says, and I'm quoting directly here, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So, after all those parameters are plugged into the model's calculation, the result is a size of 0.48 for each of the two potential trades. All right, now let's talk about the projections. The model gives us 3 price targets to watch. T1 is at the mirror line, T2 is at apex N, and T3 is up at the trapezoid top. This basically gives us 2 main scenarios. In Scenario 1, the total projected profit is $1,136. Scenario 2, which would include that optional second entry, has a projected total profit of $2,270. So what does that look like on an annualized basis? Well, if we factor in that 30-day time duration from the trapezoid, Scenario 1 works out to a projected annual return of 13.87%. And for Scenario 2, the projected annual return jumps to 27.62%. And that wraps up our documentation for phase 1. The entry points are defined, the risk plan is laid out, and now it's a matter of observing the market's progression to see what comes next. Which brings us to the big open question. What will the next documented event be? Will it be phase 2, where the price makes contact with the mirror line? Or could it be a phase 3 event, where the price hits the unlevel first? This isn't a prediction, of course. We're simply documenting an unfolding process to see what happens.
Now, before we sign off, it is absolutely essential that we go over the following disclaimers. Please remember, this is not financial advice. This analysis is being presented for public model documentation only. The model's rules prohibit using leverage above 10. You should never invest essential personal funds. And finally, any risk management has to strictly follow the system's instructions. So there you have it, a documentation of the market DNA system in Phase 1 for the S&P 500. If you'd like to see more case studies or follow further documentation, you can always visit marketdnaedge.com.